Dear students, welcome to our channel. In this video, we will be discussing few basic concepts in the accounting for partnership for CBSE Class 12 Accountancy. Partnership is a business model where two or more persons join together to do a legal business and thereby share the profits or losses arising out of it. The business could be carried out by any one partner or all the partners. The business carried out by all the partners are collectively called as partnership firm. Features of partnership. In India, all the partnership firms are regulated by Indian Partnership Act of 1932. It provides the guidelines for registration of firm, admission of minor as a partner. All matters concerning about admission, retirement, and death of the partner are detailed in the Partnership Act. In case of winding up of the company, the step-by-step procedure to be followed is given in the Partnership Act. The Act makes the registration of partnership firm as optional, but an unregistered firm could not get the legal support. A minimum of 2 persons is required and a legal agreement of partnership deed is to be made. Partnership firms, along with the Partnership Act, should also comply with the Companies Act, Income Tax Act, and the GST norms. The rights of partners laid in the Partnership Act. Every partner is given an equal opportunity to take part in the management, and they can give their consent about admitting a new partner or when an existing partner retires from the business. If the partner extends some financial support, that is the loan to the firm, they are entitled to receive the interest on the loan, and partners are entitled to inspect the books of accounts. They are to share the profits of the business, and in case of loss they have to share the loss. They can participate in the decision making process in the firm. The liabilities of a partners. Any partner who is doing a separate business and that business is in direct competition with the main partnership firm, they have to get the consent of the other partners. And any partner earns a profit for himself from the firm's transaction, he has to pay that profit amount to the firm. And in case of the actions of a partner brings loss to the firm, it is him to bear the losses. Partners in a firm. The partners could be, because of their actions, it decides the success or failure of a business. Say for example, a partnership firm has two partners, both are good in attitude, so the business is success. And the first partner is good, the second partner is bad, the business fails. Whereas the first partner is bad and the second partner is good in his attitude, again the business fails. When both the partners are bad in their attitude, this is the situation, again the business fails. So just in case of two partners itself, the success ratio of the business is only 25% and failure ratio is 75%. When there are more than 2 persons, again the success ratio of the partnership firm is very limited. In order to have a control over the failure and increase the possibilities of success, the partnership deed is to be created and maintained. What is a partnership deed? It is a legal document signed by all the partners. It gives a proper guidelines about the rights, duties, and liabilities of the partners. In case of any disputes arises among the partners, the partnership deed gives the guidelines for settlement of the disputes. Partnership deed gives the description of partners, that is their name, contact details, and all other details. It gives the description of the firm, where the registered office is and what is the location of the branches, if any. Partnership deed also gives the what nature of the business is in. They are a manufacturing firm or a wholesale or a retail firm. And date of commencement of the business is detailed in the partnership deed. and the money contributed by the partners for a capital purpose is also given in the partnership deed. The rate of interest on capital, the rate of interest on drawings, the profit sharing ratio are decided in the partnership deed. In case if the partner has given a loan to the firm or the firm has given a loan to the partner, the rate of interest is fixed in the partnership deed. Some partners, for their additional contribution towards the firm, they are entitled to remuneration which is decided in the partnership deed. Again, the valuation of goodwill and the change in the valuation of assets and its valuation methods, the share of the valuation profits are decided in the partnership deed. Settlement of accounts. In case if a partner, existing partner retires from the business and or a death of a partner happens, or all the partners decide to discontinue the business, they don't want to continue the business. In all these cases, a standard operating procedure that is to be followed is to be detailed in the partnership deed. Accounting period. It is the partners, they may decide either to follow the current calendar year or a financial year as an accounting period for their partnership business. The rights and duties of partners are laid in the partnership deed. Their right to express their opinion, access the books of records and accounts, and share the profits. Again, the partnership deed also gives the duties that are to be fulfilled by the partners. They should act in good faith. They should not do a competing business with the partnership firm. And in case of losses, they have to share the loss of the firm. Duration of the partners. The partnership firm may be limited by time based or quantity of sales based or completion of a contract. Say for example, two or three partners enter into a partnership and they decide to construct a multi-storage building and its duration may be 3 years. That partnership agreement comes to an end when that particular project is complete. This is the duration of a partnership that is detailed in the partnership deed. Most of the disputes happens or rises because of the settlement of the transactions, access over the financial aspects. So in partnership deed, there should be a detailed description about who has the control or who can have the bank account operations. Settlement of disputes. A standard operating procedure is to be formulated in the partnership deed and a step-by-step process is to be done when there is a settlement of disputes. This is detailed in the partnership deed. Some other basic aspects are any business firm is following a business entity concept. That is, the owner is separate from the firm. In the eyes of law, the owner is separate and his firm is an artificial individual. So, when a partner contributes a capital to his own firm, he is entitled for receiving the interest on capital. In the same way, when a partner takes money from the firm for a personal use and after a certain duration, he would be returning the money to the firm. In that case, he will be paying the interest on the money that he borrows. That is the interest on drawings. Few formulas for calculating the interest on drawings. In all these formulas, total drawings into rate of interest divided by 100. This remains constant in all set of formulas. The other fraction changes. When a partner draws money at the beginning of every month, it is 13 by 24, middle 6 by 12 and end of every month it is 11 by 24. If he draws beginning of every quarter, it is 15 by 24, middle 6 by 12 and end of quarter 9 by 24. If a partner draws money during the last 6 months of a year and the drawings is beginning of each month 7 by 24, middle 3 by 12 and end 5 by 24. If a partner draws during first 6 months in the financial year, the beginning is 19 by 24, middle 9 by 12 and end is 17/24. These formulas are applied based on the situation. So, interest on capital is an income for partner and it is an expense for the firm. Likewise, interest on drawings is an expense for the partner and it is an income for the firm. If you are a partner in a firm, what and all you will get? You will get a share of the profit and you will get an interest on the money that you have contributed as a capital to the firm. When you do a work on the daily basis, you will get a salary. When you impact the sales turnover of the firm, you will get a commission. And for the money that you have extended as a loan to the firm, you will get the interest on the loan. And if you are a partner and what and all you are supposed to give to the partnership firm, if the firm incurs any loss, you have to share the loss. And when you draw the money from the business for your personal use and you have to repay it, for that duration you will be paying interest on drawings. In partnership firm, there is a situation that the existing partners may invite a new partner for a guaranteed profit. When it is falls short, the existing partner has to bear the shortage amount to the new partner. And again, some partners may take a loan from the partnership firm. In that case, they have to pay the interest to the firm. The another thing is about the books of records, that is the maintaining the capital. The two ways the partners may decide to maintain their capital. One is fixed capital account method. Here, normally the partners do not disturb the initial money contributed in the business. They manage all their expenses on the incomes what they earn in the due course of the business. In that case, in fixed capital account method, the partners maintain two accounts. One is capital account, the other one is the current account. In capital account, the partners credit all the money that they have introduced as a capital in the business and record the drawings against the capital on the debit side. In the current account, the partners what they are entitled to receive from the firm, the salary, commission, interest on capital, share of profit will be credited. The drawings against the profit, interest on drawing, share of loss will be debited in the current account. In case if the partnership firm wishes to maintain the fluctuating capital account method, they maintain only one account, that is the capital account. It is just a consolidation of the above discussed two accounts. That is, in the credit side, you record capital introduced, partner's salary, commission, interest on capital and share of profit. And you debit the drawings against capital, drawings against profit, interest on drawings and share of loss. The another basic aspect is the profit or loss appropriation account. Normally, this account is prepared in the partnership firm. It is prepared in between the profit or loss, normal profit or loss account and the balance sheet. It is an extension of the profit or loss account. It is prepared to estimate the available distributable profit to the partners. The transfers are made to the partners' capital account. The profit or loss appropriation account, the profit from the normal profit or loss account is credited in the profit or loss appropriation account. The loss in the normal profit or loss account is debited in the profit or loss appropriation account. And all that the company has to pay to the partners, that is the interest on capital, partner's salary, partner's commission and the reserves to be set aside or recorded on the debit side, and the money that the company is entitled to receive from the partner, that is the interest on drawings, will be recorded on the credit side of the profit or loss appropriation account. Balancing the profit or loss appropriation account, if there happens a profit, it will be transferred to the capital account, and if there is a loss, it will be transferred to the partner's capital account. Okay students, in our next video, we will be discussing few practical problems in the Accounting for Partnership Fundamentals chapter. Your like, share, comment and subscription to the channel may encourage us to post sequel videos in the Class 12 CBSE Accountancy subject. Thanks for watching.